Hello, hello. Good morning. Welcome to another video of ES Futures Trading. Today is Tuesday, June 20. It is 9 o'clock in Atlanta, USA. Let's do a simple recap of what happened or what's going on in this market. We got this contract, the current year's contract that has started to trade um, in this day 612. How do I know? How do you know that has started trading? You can just check this website. It belongs to CM Group. You will see here. Oh boy. No, actually, you don't see it here now. But let me see if I can pull it. I can pull something else. I got it from my records. Okay, I'm going to show you it right now in just a moment. Okay, we can see here the 12th, which is this day here, right? I started to gain volume. Actually, the 969, which is this one, which has a non-excess load where it increases considerable in volume. The increase in volume was considerably high. It went from 250 from one quarter to a little bit higher than a million, and then it doubled the next Monday, which is the 12th. And from that on, the old one, I guess, was just being squeezed. There was a gigantic short squeeze here in in the market after this day. As soon as I started trading higher, the market actually break out of this range, break out of this 5-day range, and started to and the squeeze just started happening. You had FOMC here, gap 45 here, closing the gap, and the final push to the upside happening here, this day. And it there was a painful trade here um, to the upside. When the shorts were trades were cut short, it squeezed the market all the way up to 9:29 a.m. 9:29 and 59 seconds, all the way up to here. And then there was some liquidation afterwards. This I am cautious about this high because the market made a high. I mean, very mechanical high here, selling from exactly. You can say exactly the high from the overnight session, one tick from that high, and after that liquidation. Because we may until this day, I was when this day was developing here, there was only what I saw was only one trade here, which was the opening actually. Opening with a gap outside of balance of the previous days, the days to the upside. Now, one of the things that may happen is if there's any selling, usually, when the market has a gap to the upside, but if the market is going to close the gap, usually the selling happens right away after the opening. Not right away at the opening. As soon as the market opens, selling comes. And it happened. Now we have a gap to the downside. Overnight inventory. We had this overnight inventory from Sunday, this electronic trade and holiday yesterday, and more overnight inventory here. Notice how much inventory we have. 98 and 149. Kind of like all these 3 days combined. I guess these 3 days combined, these overnights, that don't make the volume that the market has this day. It is overnight here. Now you can see 350 here. 150, 100 is 250, 300 total. Yeah. But overnight inventory shell. I notice something that I mean, there's a couple of things that are going on here right now. Well, I do believe there's something going on here. It is the first thing, right? We have this day, the liquidation, where the market takes this low at the end. It could have been a spike. It wasn't. It wasn't a spike. It wasn't spiked to the downside because the market closed the gap, closed the distributions here. But there was a liquidation here. Notice how there's a bunch of stuff here. That's what one thing. What the heck is this? No, this is not valid anymore. Um, the inventory was very short, and there was some rebalancing on inventory happened in this day at the closing, and especially being having. I forgot. I didn't pay attention actually that Monday was holiday, and it was May Juneteenth. It was a federal holiday. Markets were closed, and there was a lot of rebalancing at the market close. Notice how the overnight POC that followed over the weekend on Sunday is pretty much settled here, very mechanical selling here, and then it happened again. Now we have this overnight exactly coming from this low. Now keep going down. We still have the kind of see this lower distribution here. When this distribution closes, the potential destination of this trade is this opposite side here. Uh, I'm trying to just do a technical rating here. When the market enters a distribution closes or distributions, it's a range. In this case, it's kind of tricky, right? Because we have only one day, but two distributions. I consider that to be two days. I treat those distributions as if were separate days actually. Now, entering this lower distribution, closing these distributions as it targets the opposite side. It targets the opposite, but the selling is being very mechanical here. Typical of overnight. There's nothing new here. Now, notice where it came from. It came right from this level. The market could be coming towards this level. The thing here is taking or repairing this high, this absolutely mechanical high here, closes the gap, closes the gap. There's a trade here. You got a gap. What's the direction to the gap? Gaps to the downside. What's the direction of the trade? To the downside as well, right? But there is many things that can happen that the market can be dealing with yet before before continue the directional move that was happening by the week. This was a very unusual day. Um, and all of this because can you see the volume that we have? This is the end of the contract. And this is incredibly high volume. Um, this is not abnormal. This is just as 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 common as it can be. Let me show you why. Can you see? These are the contracts, and this is quarters, no? Quadruple witching here happening here. Next one. I thought it was going to be somewhere up here, but it went high. It has nothing to do with what we do here. So I think whatever happened today, it is going to be low. It's going to be lower volume. I cannot consider. I cannot check volume. There's no way for me to check volume here. Maybe if I compare to this day, but no, still, right? Still. Uh, Now the first thing that can happen here is what the market will do regarding the gap. Okay, gaps are sign of change. Gaps are a form of excess as well. One of the best trades happen when the market tries to close the gap and fails. That's a direction that move to the downside. That could be a direction that move to the downside. But I don't have anything, right? Um, I am very interested in see what the market does with the overnight inventory. It is having some rebalancing here. You can see the market is inventory was short here. Where it was coming from? This area. Can you see there's a bunch of highs here gathered at this area. What happened? What is that area? The high of this distribution here, the closing the distribution here. Market opens here, it will close the distribution here, okay? Which is a sign to the downside because it adds a second piece of information here. We have a gap, we have the market closing these distributions, okay? Which means or sign as a rejection of higher price and kind of like confirms or gives some validity to the excess that we have here. Right. At the beginning, when this happened, it could be some selling, rebalancing of the extremely long inventory that the market had. But when when it's coming, it's taking these levels in the downside, taking the low here, taking hard back, and closing this distribution, it starts to have another piece of meaning. Starting from the low, for the market, the daily low the market had here, right? Okay, the first sign here, you know, the first of her gap, closing the gap changes everything. Closing the gap is one thing, right? Higher prices are being rejected. What happens if the market closes the gap here? It also means, if the information the market is giving us is, there's a rejection of lower prices. No, but the rejection is relative to something as well. Relative to what? This market is going higher. Huh? This market is going higher. Um, let me show you why I say that. This is what we have. What the heck is going on here? Why I cannot see this? Okay. All right. This is the monthly, weekly, and daily. Can you see what's happening here? What's happening in the monthly? We have a range, 13-month range, and there's a breakout of this range. Clear, clean breakout to the upside here. 2-month range, very, very far, at least now, from this 2-month range. When next reference on the upper side, pretty much round numbers here, the 4,500 and the 4,600 up here. The weekly, uh, if you have noticed, there is some cleaner, cleaner. There was some cleaner trading cleaner charts in the weekly than in the daily. Now, something of this is being reflected in the monthly time frame as well. All right. The daily has a tremendous amount of weakness on the lower side. You can see very mechanical buying, mechanical, the firecracker potential, multiple lows here. Can you imagine the amount of lows if the market comes down to here and take these stops here? This could be a really, really, dynamic movement to the downside. Below this, you have this firecracker the potential for firecracker effect here. Also, I got 1, 2, 3, 4, 5 lows here. There's a lot of things. Extremely weak market in the downside, but the market is going to the upside. Currency is going to the upside. The weekly is going to the upside. 1, 2, 3, 4, 3 weeks going to in a row going to the upside. The second month is trying to establish yet, and the month hasn't ended yet. We have a very elongated bar to the upside, very very long bar, and the month is not over. Just as much as this one. Can the market have excess here in the upper side, give you some kind of printing like this one, for example, or this kind of excess? because the market doesn't have exits in the lower side. You don't have exits here, it doesn't have exits here. Very close lows here, very dangerous levels here. This is market, but the market is going to the upside here as well, and obviously the daily also. Okay, most of us just most of us don't pay attention to, don't see these charts. What we do, most of traders do, they do this. This is 10 minutes, 30 minutes, not even 30 minutes chart. This is a 30 minutes chart. They go even deeper than that. Yeah. Extremely zooming, this is a 5 minute chart. You know, but when you have kind of like zoom out and see the market, you can have, even though you don't have too much information, we don't have too much information. We are retail, very short-term trading traders. Um, the information that the market can, give us when we use these different time frames charts are can give us some clarity, some clear, uh, you know, give us a better perspective, better chances. Okay, that's the word I was looking for. Better opportunities here. All right. Now, this market is going to open in 10 more minutes. What do I have? I don't have nothing. What I'm going to do now is I'm going to fill my charts. It is just I'm going to fill my. I'm going to use this. What day is this? This is the 16th. 375. I do have this. I do not have this one. 98, which is belongs to Mondays overnight. This holiday. Let me just 98 087. Let me grab some. Okay, you got 73. Home plus. Oops. 43. 43,776. Now we have another another volume. Oh, okay, well, this isn't over yet. What I am doing, what I'm doing here is I'm gonna show you. Let me do something. Let me finish this thing. Oh boy, I didn't do it. Oh, okay. June. Okay, ESU. Just give me a second, because I am feeling some data here, so I can take a screenshot here. All right, I got it. This is what I have. This is what I have here. I was feeding this data here. This is the volume from this overnight here. This is what notice. My bad. This one 98. Notice the volume here. There is no trading here. Oh, I forgot to fill this part here. Uh, Very low volume actually. June. Okay, let me do it again. I got a one now. Now this is data from. This is the old contract. This all this here is the old is a June contract. This is the total volume. Oh, come on. I'm still wrong here. No, it's fine. Notice how the total, CME total is almost 1,800, and most of that volume, 99% of that volume is the new contract. The old one, the June contract has really low volume here. And I use this one to have a record of where closing stands because um, very often I do replays and I need this data here. This is last, this is seller, this is last. This is the new contract. Now this one here, this is rollover period that started on the night as we were talking yearly today, and this new contract here. Now I will start to write already over here because there is no more June contract here, and this contract is pretty much gone. You know, technically it still expires on Tuesday, but I don't know what's going to happen here. I haven't seen this kind of situation before. Um, Now we have 8 more minutes to the opening. I believe also, if you were paying attention, I think that this market the market did yeah, very impressive, um, very impressive run to the outside, which for me it looked, it has all the marks of a short covering rally. Trades being caught short here and being squeezed to the upside. Which traders? I believe the shorts and naked call sellers here of the old contract. Um, all of this upside movement started with Nvidia. When Nvidia has that all of this talk AI craziness that is going on in the market, it started pretty much at the same time, but it was very close to when Nvidia reported earnings. It was the last thing that happened in the market, and those are the random things that happen in the market, right? We never know what's going to happen. Jim was saying that uh, because he has better information than all of us, he's kind of like an insider as well. Has very prominent friends or customers that are in the market, right, and knows information from hedge funds. He was saying that this market or this investment or bigger investment money was expecting or was waiting for a pullback to enter in the long term. Now, as I say, nobody knows what's going to happen. Now we got this AI uh, breakout, breakthrough, um, Nvidia earnings, and a lot of things happen after that. I guess that happened down here or down here, something like that. All that shadow started happening somewhere in this area. And now from that on, there was no pullback here. There was nothing here. And now, if you have a lot of money to invest and you were waiting to invest somewhere up here, down here, or down here, now the market is way up here, right? So what's going to happen to them? Mhm. They are being squeezed as well. This is a different kind of squeeze, right? We are not familiar with that kind of squeezes. It is when you are not, when you are underinvested, huh? Because you are judged, you are measured against your your peers. If somebody is going to have, another company is going to have 5%, 7%, 10% profits on returns, and you have 5, 4, 3, you are being, you are a really bad manager. And what's going to happen? You know, it could move this market high. I'm not saying that's going to happen, but it could. That's always a possibility there that can be happening. Now, what do I think is going to happen today? I don't know. I don't have anything. The first thing that I have, these very, very concrete pieces of information here. Um, First, as I say, the gap to the downside, overnight inventory is very short, coming into multiple pieces of information that that can be contradicting each other here. Multiple pieces of information here contradicting each other, and those are just different time frames. You are, this is just meaning that we are just watching different time frames, the work of different time frames here. All right. Now, from from the histograms, now the market has taken this yeah, big chunk of volume. Now these ones were just expecting something happening here. Please let me call. Let me request. Let me call. Well, there could be some liquidation from this volume. The next accumulation of volume is right here, right where the market is at this moment, uh, and the ultimate down here, which happens to be the 4400 level. What I'll be seeing here is what the market does with the with the gap. Okay. All right. Couple minutes to the opening. Did you see that movement that happened right now? This boom movement to the downside. Those are stocks being hit there. The market was getting super long here. You Going to the downside and notice. Look at how this is happening. Right? Trade is buying the dip here, buying the dip, and the gap is increasing right before our eyes, right before the open here. Let me see. I want to see something here. All right. The market is taking all these loans here. All this long inventory is being removed now. Mm. What happens when the market removes? long inventory, market gets stronger. All right, market is open. First reference in the lower side. What is the first reference in the lower side? Market has closed. Market has closed the distribution. Market has a gap. Is the market paying attention to the overnight inventory? No, come on. Okay. No, no attention to the overnight inventory. Screw that, market says. There's a bunch of shorts here. There's a lot of shorts here. This one, this one, this one, this one. And a gap. This is gap close now. This is gap close now. The distributions have been closed, which targets this low actually. And the main thing, the market has re-entered this range, this 2-day range here. There was a breakout of this range, giving us a 4-day range somewhat. This is, can you see how also in the daily there's a distribution in the daily, right? The daily time frame from here to here. Market has closed the distribution as well. In the intraday time frame and also in the daily, distributions have been closed. Now let's see what the market does with the gap. That's the most important thing now. The gap close, and I believe this what the market can do with this all this inventory, this overnight inventory here. Notice that there is nothing here. There's some mechanical level here as well. This market has been bought from this. It's been bought from this level here. If there's anything to the downside here, new volume needs to come. I mean, not just liquidation, but new volume, new selling, basically. Market has took the overnight. Let's see if there's a counter action here. This overnight, these shorts, these weak shorts can be squeezed here, can be forced to cover here. Very weak inventory here. It's a nice entry here. This is a nice long here. So because it gives you what happens here, it gives you a level where to trade from. Is this low here? Right? The market, as soon as the market comes back and take this low, you're out. What could be the first thing? The market, the destination is closing the gap, right? And that's a potential trade. If there's going to be any troubles, could happen here to begin with, right? But to monitor the trade for continuation, you got hard back here, POC, another, this is my bad, POC, high here, another POC, another hard back, and before this last two, closing the gap, which changes everything. Right now we have a downside market, but if the gap is closed, there is a lot of change, that a lot of scenarios that we need to discard and start thinking new ones. All right. Notice where this overnight has came from. Exactly from this low. Right? Exactly from that one. Good also market is going to take this high as well. significantly higher volume at the opening relative to the previous week. Can you see this high here? Can you see this high? That's higher than all of these almost 7 days. 7, 8, 9, maybe even 10. Now you got a long here. You can have some pullback here to this area. Not the closer to halfback, the dangerous it becomes. The risky it becomes. I'm going to remove this one from here. It's getting in the way. I'm going to replace it or this one here. What the heck is happening here? Nice. This could be a counter action. I mean, notice how all this inventory is here. This one, this, and this one. All those shorts. There's a lot of shorts, a weak shorts there. Now can the market close the gap? Market, the market is making an attempt to close the gap here. Oh, 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 oh. Oh, look at this. This could be awesome. This is breakout. It has taken. This level has been taken. The market has re-entered this range. Now it's coming back outside. There is a market's kind of like in nowhere land right now. You got your long. Just monitor for continuation here. There's a level there in this day which is 44, 43, 75, 44, 44, 44, 45. It could be what the market's been. What is that level? Is this one here? No, this one. Just as for this is I guess I am zooming in too much here. That one. That's from the overnight. It doesn't make any. If there's some selling, there's some selling from that level. There's good also market's got to come back to take that level. My lungs are getting dangerous here. The market is not, you notice how the pace has decreased here. It started strong, but now it's there's no, it's failing. The market is failing to having upside continuation here. What in the heck? Okay, alright. Market couldn't take this couldn't take the distributions here. It failed. It just stalled here. It just stalled here. It's stalling here. It's having serious problems here. This market is having serious problems here. This is a downside. Buy the book, selling from. It couldn't take. It couldn't close. It couldn't get back to the distribution high. To the high of the day, it couldn't get back to the overnight POC. It took the half back. It came back to this level as and buying started here again. In this area here. Did you see the buying that appears here down here? No? No, let's try again. Let's try again. Let's try again to take this high. Let's try again to take this high here. Did you feel it? Did you feel the buying just stopped up here? Then there's some rebalance in there. There's a pullback, and then buying just kind of like retreats, and then come back again. Right now, the same thing that I can see here is what I see here. So that's why I don't. The only thing that I have is these lows here, this area here, this small area here. Come on, this small area here. Oh, you have that one, this one. Oh, come on. You have this lows here, and now we got this low here, and this lows here. No? What do you have below these lows? You got stops. Well, you got a bunch of stops here, and there's a chunk of volume down here. But to come over here, the market needs. Yeah, you got this market here as well. Here you got overnight has been taken just for a couple of ticks, and they have 29, 20, 29, 20, 75, and 29, 25. There you go. Those are your very, very, very short term reference levels in there. You cannot see here in this profile. This is you have to open it to see it. Now, what's I'm buying that happened here in this day? Not too much though. Yeah, the same amount of volume you have here, the same amount. You have a very tight range right now at this moment in time. Any questions, please? Any questions, please just let me know anytime. This was a nice trade here. You know, location, you got counter action. This is just a counter action to overnight inventory. Counter action to this overnight inventory here. When you enter the market here, very risky though. So it was very hard. Maybe when the market comes out and re-enter, this is when you. But the thing is, when you go long here, usually what you do is you go long here when the market comes bought from here. And but if the market takes the low out, you got to stop here or here, just one or two ticks below, and that's it, no more, because the potential to the downside is huge here. And the next thing on the lower side is 44.10 basically. And if the market taking this low out by three ticks, that's a sign that your trade, my trade to the upside is it didn't work. Very hard to take this one. It looks easier. It is easy to talk, right? It's easy to talk. Well, you don't have a position in the market. This is really easy to say. "Oh, okay, you go short here, and you go long here." I wouldn't have the reason why we would take a short here, aiming again to this low here, is that the market just stalled here. It was having some good tempo, good pace, good good energy. The market was having going to the upside. Where after the market took this low, made this low, and was going, such steady pace to the upside. But when it come close to this level, it's just a stock here. It's just a stock. Took overnight hardback, stock. It just didn't have the steam. But when that happened, what's happening there? The market is failing to close the gap. That's the most important thing because there's a lot of short inventory, weak short inventory, weak traders. Overnight traders are not the strongest ones out there. And the market is failing to take those ones out. If the market cannot take weak traders out, that's a weak market. One thing. The other thing is the gap is not being closed. The other thing, the distributions for 615 have been closed. Not all signs of the market going to the downside. Okay? But still, we are in this period from the opening, coming from a contract closing, no significant pieces of information or releases scheduled for today. We start having tomorrow, I believe, Chairman Powell speaks in front of Congress, and then on Thursday he speaks in front of the Senate, and you know, all there's nothing kind of like a um, something there that the market can use to trade or to increase volatility. But we have here these inventories, very short-term trading here. The gap has not been closed. Okay? Gap has not been closed. 615 distributions have been closed. Inventory, overnight inventory is not being taken out. Sign one, two, three signs of a weak market here. And the fourth one, buying coming from this level here. Not just 100, a couple ticks from overnight low. Not a significant, not a very strong. uh, a significant reference as a good sign that a strong buying is going on. I would be very cautious here. Okay. Why do I have this? Oh, I have this level, which was an intraday high from the overnight. Rally high from late rally high from the overnight. If you have any questions, comments, please, you have an opinion. I would love to hear anything you have to say. I speak Spanish as well. Hablo español un poquito. No, mentira. Es mi idioma nativo. Okay. All right. What do we have here? Yeah, I can't stop looking at this inventory here. Oh, the other thing here. The other piece of information here. Market has re-entered this lower distribution. Right? We know that market has closed the distribution, and also the market has re-entered this two-day range here. Market has re-entered to this two-day range, and I want to see if it can keep building value here inside this two-day distribution, or finally, or if it comes back inside this day, closes the gap here and comes back inside this. Yeah, I think if this keeps builds value in this area, yeah, man, it would be too dangerous for the longs here, and especially if you have one or two periods going to the upside here, but it cannot close the distribution. It's very mechanical high here than the other night. I would be surprised if this high is not challenging. Uh, Challenging this high also challenges the market. Taking this high, removing all these shorts here actually challenge the market because it would to do that the market will actually close the gap here. Yeah. Okay, you got this. Level was rejected previously. Notice how the market traded to this level very fast, very quick. It's just not there, man. Hmm, there's a good buy in here. Hmm. There could be a spike to the downside here. The reds are coming. Okay, pinks, reds in this area. Notice how this area is being. That's your level there. That's your level. The market is building something there. I know. And why it could it's a level to buy, right? But why you want to be a buyer in a market that's going to the downside? Hmm. Did ask that question yourself. Why I would like to be a buyer in a market that's going to the downside? Why? I mean, what is your time frame? Okay, we have seen the monthly, weekly, daily are going to the upside. But I am not a daily time frame trader. I am not a weekly time frame trader. I am not a monthly time frame trader. I do very short term intraday trading. The period is going to, oh boy, this could have a spike to the downside here. Less than 10 seconds before the next one. Oh, notice that below where it is has been repaired now, but it's very close to a low. This is this has all the signs on the downside market here. Market to the downside. And notice where the high this is. No? This area. Now this was being used to buy, now it's being used to sell. There's a lot of loans here that are, kind of like very nervous now. I wouldn't like to be alone here in this market. No, sir. Higher volume, no? Higher volume relative to, these 2 days. How you are going to compare the market? I will discard this day. I will discard Friday. There's another low. These lines here belong to these lows here. This one, this one. This is another set of stops down here. These stops are not, the stops here, here have not been taken out. Notice how volume dries now. I have this area, and now volume dries. If this area is taken out, that will be the next thing to see is this. It will become support again if this level is taken. This I'm talking about. You're talking about this accumulation volume here. Notice how volume is accumulating here. Right? Not too much. Not big blocks here. All signs of a weak market. Good odds having a downside day. The sailing here as well was very. I don't forget that how mechanical this sailing was on Friday. Well, this lever gives me chills. It's not. It seems like it's just a rebalancing of inventory here. Inventory was too long here. All right, it is 10:05. Unless you have any questions, I guess I'm going to call it a day. I think my hours and another thing that's happening here. This market is getting too short here. It's incredible how this how markets move from too short to too long in really short periods of time. And this I'm calling short, calling too short and very weak hand, weak. short inventory is being held, but very weak traders. Now everybody's talking about soft landing. The Fed is going to succeed in in this soft landing. There is no recession anymore in the horizon. Everything's good, as good as it can be. Oh, well, how things can change really quick. And when everybody agrees on something, all right, let's do some liquidation now. It, it just happens over and over. The same thing happens over and over. Notice that what the market has below here. Okay? Notice market should have any problems going to the downside here. There's nothing here. Nothing here holding this market. Single prints here. Hmm. 44.90. What is this? 44.90? 44.10. Yeah, 44.10. Notice this. Very thin profile. Good chunk of volume here. There's a good amount of buying that happened just after the 4400. Keep an eye as well in. Actually, I have checked the other markets. What's going on with the other market? Bonds, I mean, crude, who cares? Dollar is recovering, bonds trading. Oh, bonds are going to the upside actually. Oh, look gold, man. Look at gold. God damn. The market is pulling money out of the gold market. If gold takes this low here out, notice what it has below. There's nothing here. Money coming out of this market, and guess what? Guess what? Or where it's going. But it's going from, this is pure craziness in gold. Notice this. Shell coding, low liquidation, shell coding, low liquidation, low liquidation, shell coding, shell coding, low liquidation, cash. The ES, Nasdaq also coming back into range, can the market come very close to coming back. The Dow, the Dow should did the market make a new high? Huh, it took these highs out. Yeah, okay. This could break here, actually. What happened with the Russell? The Russell is different here. The Nasdaq Tech, Tech is having some good. All right, I'll keep this on the side. I want to see if the market can start, you got this histogram here, you got this big chunk, right? Taper, volume, taper. Can the market do the same thing here? If there's some change in here, this volume will start to build here and have kind of like another histogram inside this 30 minutes histogram. In the same way as we have these two distributions here, you know, two distributions here, one the upper, one the lower side. If you zoom closer and closer and closer, you have a huge zoom. You may have the same thing going on here. What I use, what, or yeah, I mean, by itself means nothing, right? If seen in context, in the very short time frame, we got this level which was a lot of buying happening here going to the outside. Now there's a lot of selling coming from here. Very close to halfback, very mechanical high on the opening. Yeah, market has re-entered this distribution. I mean this previous period, previous period range. All right, it is 10:13 a.m. Unless you have any questions, I guess I'm going to call it a day. I expect to see you tomorrow. All right, guys. I'll have some time today. I will do a replay of Friday. This is this day. Don't expect this day what happened on Friday to happen often. It was a very good day to the downside, but it doesn't happen. What happened before, like the whole month before, has a lot to do with what happened this day. What happened on Friday. So this is not something that you will see every day. All right. Okay. Have a wonderful rest of the day. I wish you good luck. Stay safe. See you tomorrow. Bye bye.